Hey guys, good afternoon. Those that don't know, my name is Doug. I am your humble broker. I am here with a bit of a market update. As I mentioned before, this is something that I'm passionate about, and I'm really excited that we can take advantage of the culture and the resources of this market center in particular. John Newman and Simone are going to join me up here shortly. These are like the heavy hitter thought leaders in Keller Williams regionally, right? That do a ton of work on the floor, on the ground, crushing it in their business, right? So we're gonna get insight from them and how they're experiencing this market in real time. So hopefully you guys will walk out of here and we'll have accomplished at least a couple of things. I'm going to show you some of the resources that I look at when I'm talking about the market rate. These are resources that I may share with a client. These are things that I'll just check periodically. With that, hopefully you guys are going to look and sound a little bit smarter, right? We're going to be able to not only just parrot back certain things that are going to make us seem smart and more knowledgeable, but I'm going to give you resources that you can post to social media, things that you can spin off and write blogs, do videos on, right? So there are ways to make yourself a thought leader in this exercise.
So we can hear better.
Yeah, hopefully people will be still coming in, but yes.
You're supposed to yell. You said you want to yell.
I know, I'm not a good yeller. I lose my voice very quickly. So the main thing, why this is important to me and why I'm talking about this. When I was a new agent, this is where my sort of imposter syndrome set in, right? Especially if I'm putting myself out there and I'm going to help family and friends with this, so I really understand the market. And sure, I can read, or somebody might say this buyer's market, keep that door open, actually, just so people know that they can still come in. People say it's a buyer's market versus a seller's market. What does that mean? Can they still go in 10,000 under, or they need to be 50,000 under? Is it going to be sold in a week, or is it going to be sold in 6 months? More than that, once you get a handle on one type of property and one geography, who's to say that's the same at a different price point, right? So if suddenly you find yourself in a different zip code or a different price point or a different type of property, how the hell are you supposed to keep up with all this stuff, right? Unless you sell a ton of real estate all the time, you're not going to have firsthand knowledge of this. So the only way we can try to impart this to you guys is just have this be an ongoing conversation. So I'm going to give people kind of the bigger picture numbers, and we're going to update and bring in a panel that's going to give us the more practical expectations. And then finally, this is going to change the way that we're going to do business. The people that are thriving are going to adjust, right? And we're going to hear from John and Mark on what that actually means. Okay, we're going to start kind of broad and we're going to go narrow with these numbers. So you guys may be aware that the interest rates have ticked up just a smidge in the last couple of years.
Just a smidge.
I know these numbers, I speak to these numbers, but this is still shocking to look at on a page, right? So this is since basically once the calendar year clicked over into 2022, it just took off like a rocket, right? It's been basically unceasing up, and you can see at the very end we're inching towards 8%, which is the highest in decades that we've seen. Perhaps, yeah, no, you're right.
8% is not bad. It really isn't. I mean, I remember when it was 14% notified.
Yeah, we will definitely talk about that. We will definitely talk about that. Yeah, exactly. Yeah.
I think we need to stop saying that it's bad. Because we're problem. I mean, the news is talking, the way the news talks about it, it's horrible.
Yeah.
It really is not.
So yeah, so I like that very much. We're gonna put a pin in that. We're gonna talk about that because I think our messaging is going to be important.
20 years ago, my first home was 6%.
Yeah.
So that's why I tell people not to cut. I tell my clients, I said it's either going to be 3% and the house is going to be 800,000, or 6% and the house is going to be 400,000. But that mortgage is going to be the price range. realize, but I kind of know, so it's a law of the average, that's what I use my. average.
Well, so there's layers to all of this, right?
Okay,
So what people are experiencing very acutely is, damn, I just missed it. It was only 3% 2 years ago, right? That's the mental battle that we're doing. And let me just show you an exercise, which is unusual, and it will change, right? Like, I just pull up a random mortgage calculator, defaults to a 425 property, 3.5% interest, you're talking 1,800 a month. Make that 8%, 2,800 a month, all right? These are real numbers that are shocking people, and it's because we have such proximity to this aberration of the lowest rates we have seen or will ever see, right?
Right.
So I do think we're still in kind of the whiplash phase where people are like, I just missed it. All the sellers are pissed that, they should have sold 2 years ago. The buyers, they're just looking at this. But the fact of the matter is, for people that have been in the market for a while, if they were pre-approved for 425 2 years ago, they can't afford that anymore.
right, we gotta go down.
You need to go, yeah, a lot. You need to go down a lot is what you need to go down to. And perhaps more importantly, we know there's a cause and effect relationship with the interest rates and the number of sales, right? Like, this has been and this is all intentional. None of this is surprising. We had a crisis of inflation. The Fed said, let's raise interest rates to basically crush demand and lower the speed of the economy. And lo and behold, that's exactly what damn happened, right? Once it clicked over to 2022, which is right when the interest rates started going up, you see a precipitous drop, right? So this is all very explainable, right? And this is national stuff, guys. I pulled this from National Association of Realtors. I just thought this was interesting because I was talking about how the market may disparately impact different price points and different geography, right? So they broke it down into these different price points as how much the market has sort of fallen off at each price point. And it's not kind of a perfect line here, but my interpretation is that the lower price points have definitely been hit harder, right? I don't know if that's exactly what you've experienced, but you can see if you have $1 million, the $1 million listings fell off less than 10%. But if you have that $200,000 house, those have dropped 25%, right? So like any other kind of recession or market adjustment, it impacts different populations unfairly, right? So, and hey, if you want to go after a couple more $1 million listings, I would really advise you all to do that. It sounds like that's probably the place to be. Okay, so narrative time. So interest rates have been going up. Everybody knows that the market has slowed, right? So you are hearing people say, okay, when are the prices going to start falling? Prices must be falling. When are the prices falling? Okay, similarly, I ran this yesterday. This is on Google Trends. You can search, I just searched for the term housing crash. And you can see the last couple of years, people are a lot more damn interested in figuring out whether the market is about to crash, right? There is, I don't know that it's panic, but there's certainly a lot of people that are anxious, right? And when I see people Googling housing crash, okay, my interpretation is those are people that are either waiting for a housing crash or they're terrified one is about to happen. So these are the people on the sidelines, right? They're waiting for something to happen before they get in gear. But the housing market has not crashed. You guys, prices,
It's not gonna crash.
and it's not going to crash. Thank you, Brianna. So this is nationally. Regardless of what interest rates are doing, it's just been kind of ticking steadily up. You can see there's a little bit of variation just based on seasonality. In the wintertime, prices go down a tiny bit, then they pop back up. It's like it's all trending up and it's all very surprisingly normal. Considering that interest rates went like this and volume went like this, price is sort of along this very predictable trajectory right now. if you do have people saying, I saw on CNN house prices are falling. Show them this graph, okay? How prices are falling in a couple of places. If we thought we had it, if we thought things were kind of crazy and hot in 2021, we don't know the half of it compared to Seattle, Portland, Southern California, parts of Texas, Arizona, and Florida. Those places went bananas, right? Like really problematic overpaying where it got thrown completely out of balance. And those markets have contracted. They have cooled because it was out of balance. But look at where we live, you guys. Basically, the only green part of the map in the entire country is the bright MLS footprint, like right over there.
Because
Okay.
it's pretty much naturally occurring, like it's not, well, I mean, yes, some things were overinflated, but the supply, like the demand was high, the supply was low, and the supply is still low, and the demand has cooled a little bit, but not so much that it's going to cause.
Not enough to really disrupt anything. Yeah, so balance. And the term balance doesn't make sense to people because it seems like it's been so silly. But the way that buyers and sellers felt 2 years ago is sort of how they feel now. In terms of supply and demand, it's still a seller's market. Demand went down, supply went down, demand went down a tiny bit more, but it's still all kind of normal-ish, right? We're not in this crazy situation. And it's a good thing, right? Like, if you help somebody buy a house in the last couple of years, like, thank God their houses haven't just like dropped in price 20%. I mean, it's
Somebody keeps trying to get into the thing.
somebody's supposed to be. Very popular. Okay, thank you. Okay, just a tiny bit more national stuff before we get more local. When people ask me what the hell is going on and why is supply so low, it feels like it snuck up on us, right? Like suddenly supply was this big problem. And this is the first thing that I point to kind of explain what's happening at the bigger scale, right? We have not been building enough houses as a country. 2007, 2008, we were building plenty of houses. Then guess what happened? There was a housing collapse and people stopped building houses. A lot of builders just went out of business. They did not come back into business.
A lot of builders went out of business in 2020, 2021 because of how high the supplies were, right?
Yeah, so even now, so that delayed this. So even as the economics started making sense that, oh, we need more houses, I can't afford to build another house because lumber is so high, or there's all these like supply chain issues or labor shortages. So like there's been a lot of issues and there's been a lot of reasons. But the macro explanation for why everything's so wacky is a structural deficit. You do not have enough houses, right? Couple that with a huge generation of millennials that are now coming of age that wanted to buy these houses, right? Couple that with the lowest interest rates that anybody has ever seen or will ever see. So not enough supply meets way too much demand. So that was what kind of went nuts. But this is my best explanation for the supply piece from a structural angle. This really helpful chart goes through a couple of other things I want to talk about though. I'm sure you guys are seeing this now. People that have a 3% interest rate are not interested in buying a new house at 8%.
Right.
It is painful to them, right? And we just looked at it. It was an extra $1,000 a month for a $450,000 house to go from 3% to 8%. There is not as much turnover. There's not as much fresh inventory. And I think some of that's going to normalize as people are just, okay, 7 and 8 are okay, 7 and 8 are okay. For right now, people are just feeling it. Like, man, I can't get rid of this rate. The final piece I wanted to mention, people are just staying in their houses a little bit. I was always kind of taught the 6 to 7 year turnaround, and I think that's still not unusual. But I think it has been ticking higher for at least a little bit longer. And guess what we just talked about? That rate lock, what I call like the golden handcuffs of that 3% interest rate. I think this is gonna tick even higher. People are gonna stay in their houses longer. There are people that they have that kid, they get this extra job, they really want to move. They might even need to move, but they're like, look around, maybe I can live in this house a couple more years. Like, that's just what we're experiencing right now. Okay, so that's national stuff. But all real estate is local, and this is where you're gonna really demonstrate your value, right? You are going to show them not only local data, but hyper-local data, and you're going to demonstrate and make it clear that you know what's up. Okay. Maryland Association of Realtors and Bright, you are all already giving them a whole bunch of money. They are providing a whole bunch of this data that we should be taking advantage of, right? So every month, Maryland Association of Realtors put out this little infographic, right? And it pretty much tells a similar story to what we were looking at nationally. Units are way down, but price is still bumping up. It's not going up 15 or 20% a year like it was a couple of years ago, but it's still edging up, okay? Pending down, active down. Months of inventory has been pretty flat. So this is what, I know this is something that Mark really looks at when he's tracking his markets hyper locally. Mark, I'm starting to talk about absorption rates. I'm glad you walked in. Well, what's interesting is that despite all the changes that we're looking at, months of inventory statewide has been basically flat from last year to this year. Everything else seems down, except for price, but this has been very flat. And days on market is sort of echoing that, right?
Yeah.
It's actually a little bit faster houses are going than this time last year. So this is statewide. So we'll talk. So this is statewide. If you scroll down, you can go deeper and more local. Okay. So if you click on any one of these reports, I've already opened one up here.
They're all going to be pretty much the same except for like the outlier counties, like the Eastern Shore and stuff like that. You're probably dropping a little bit quicker. I mean, the one supply probably a little bit higher than.
Yeah. So we can. So this at least lets us dive into county by county. So if you do have a weird county that you're not as familiar with, definitely look and at least make sure. I mean,
can you unhighlight that?
yes. Well, let me actually finish. Let me do what I'm highlighting, and then
I can't read what you highlighted.
Okay, got it. Thank you. I can read it fine over here. So I highlighted Baltimore City and Baltimore County because A, that's probably the most relevant for this office, and B, it provides an important distinction. They're right next to each other in chart, which is helpful. You can see that over the past year, the county has gone up by 5% in median sales price. The city has actually dropped by a little more than 5%, right? So you can't use the exact same talking points for every single situation, right? If you are in Howard County, you know, they're showing months of inventory at less than 1. Stuff is flying over there, okay? They don't put their houses on the market, what you said?
They don't move.
Oh yeah, they also don't move, right? So this gives us an opportunity to track things a little bit more holistically, and you can go crazy. I mean, if you want to see trend a certain county, a certain map, if you want to trend the days on market for Anne Arundel County, you just open up 15 of these tabs and you get the last 15 months trend, right? You can create a lot of really cool data that tell the story that you're trying to explain. Right, also has, and I'm gonna send this to you guys. If you guys aren't familiar with these reports, I'm just gonna give you tiny little previews. So this is a monthly market report that they put out. It gives you a lot of the same sales statistics that we were just looking at, but this at least lets us go from statewide to, they'll sort by the Baltimore metro area, which is Baltimore City and the immediate surrounding counties, right? So that takes out the Eastern Shore, it takes out sort of Garrett County and stuff. I just review this every month, and just steal things that are interesting. Like, I'm just gonna pull from this market outlook. Elevated mortgage rates will limit future new listings, as well as potential sellers clinging to their homes and their locked-in rates. The tug of war between supply and demand should hold prices firm. Rates are anticipated to drop in 2024, and as buyers return to the market, the pressure on prices will only grow. Okay, if you can't create a little video or a blog entry or something around that, you're not trying hard enough. I mean, they're giving us pretty good ammunition to make something cool. Like, so even if we just parrot this stuff, you guys, it's going to make us be perceived as market experts. But if we take it further and sort of dive into how does this impact your local area? I mean, you can tell a story to buyers around that, right? If you think prices are high now, when there's more buyers, prices are only going to go higher, right? So we can use this to our advantage. Bright even creates a weekly report that allows you to track 5-year trend lines. Okay. So just because I like the historical aspect stuff. Sometimes the year over year is helpful, sometimes month over month, but if you want to really be able to tell the story of where we are holistically, you can get a quick snapshot, right? So this is weekly showings. We're just highlighting the bright orange line. We're pretty darn low, okay, in the last 5 years. Showings down. New contracts, way down. Days on market, sort of in the middle, ticking high relative to the last couple of years. New listings, not good. Oh, hey, price. We're crushing it on price, you guys. Prices are still good, basically. Everything else is crap, but pricing is still great. That's the takeaway from those.
Pricing is still great for who?
It's very well.
For sellers.
But I still like you have to have the conversation with sellers about pricing it right, because it's not to that much of a market. Like you can't just overprice it and expect buyers to still just like whatever.
Yeah.
Comps are more value now.
Yes, so that's the conversation that I really want to have with our real experts as to how we use this to set expectations and sort of lead our clients to reach the conclusions that they need to reach. This is the kind of big update thing that I want to highlight that we really need to track, okay? Bright puts together what's called their home demand index. It is a little bit unclear where these numbers come from. It's proprietary. It's based on clicks and showings and buyer activity. So they basically create all this data and they say, okay, I'm going to assign a number that shows buyer activity. This is in the Baltimore metro area. Last year's the blue line. Okay, demand goes down in Christmas time. Okay, that makes sense. Then it shoots back up and tapers gently in the fall. This past year, okay, it went down a lot in December. Interest rates are higher. I guess I understand why it's a little bit lower here. And then, holy crap, what happened? It fell off. Okay, this is something. These numbers came out 2 weeks ago. I don't know what this means yet, but something is going on.
That's 2022, 2023.
This is 2023. This is like yesterday. That last.
No. No, the blue line is from October 21 to September 22.
Okay.
The orange line is October 22 to today.
So again, this is demand. It would make sense that this year's demand is lower than last year's demand just because interest rates are higher. But you still kind of would like them to track along the same curve, right? So I don't know what to make of this yet. This is a concerning number, right? That it went, we're lower significantly than this past December's demand. And do we expect demand to go up or down as the weather gets colder and we get closer to the holidays?
Yeah.
I don't know where this is going to be in December. Right now, there's a few things that explain this. August to September is exactly when the interest rates ticked up over 7%. And then it's been edging upwards to closer to 8%, right? There is unrest in the Middle East. I think we have a House of Representatives speaker now as of like yesterday. But there's still probably going to be a government shutdown. There's a lot of uncertainty going on right now. So I think buyers are feeling it, and this is very real time. Like this is meant to be real-time indicator where we can start to project forward what we think demand is going to look like. This is a last month through this month representation of their demand index, guys. They break it down by prices, but it almost doesn't matter. Last month, demand was meh, then it's terrible. Demand was okay, now it's bad. Demand was pretty good, now it's bad. Whatever this metric is precisely measuring dropped precipitously in the last month. So we need to watch very carefully. I really want to know what the next data point is, right? Does it keep going down the same trajectory? Was it a little blip? We need to pay attention. But we also can use this in real time to set expectations, right? If you have a single family below $335,000, this is saying that demand is not great, okay? And if we're just now getting it on the market and nothing's gonna happen until next month, demand might go down more. So maybe you have the conversations about landscaping and paint colors and things that you weren't having 2 years ago. I won't go into this because there's a little bit of a time constraint here. But Mark, I think you'll like this. They actually let you dive in and measure demand by zip code, at least. So, and I just highlighted Baltimore County here. This is 3 months ago compared to yesterday. Okay, blue is bad, basically, for demand. So a few months ago, you know, you would expect Canton to be performing better than certain areas of North Baltimore, right? And you want to be able to dive in. Like if you have a seller or you have a buyer and you're looking at a specific zip code, they want to target a neighborhood, pull this up and just see it. If it says, you know, demand is crazy, that's going to inform the type of offers that you need to write. If it says demand is nothing, maybe we can go in, maybe that's when buyers can capitalize a little bit. And on the flip side, these are the number of fish in the sea for your sellers, right? If there are fewer fish, have to be a little bit careful. All right, I'm gonna work it out of the way. So I need to draw something that's gonna really excite everybody. Okay. So I drew this graph a few months ago when I taught this class. I'm very excited about it. I don't think anybody else is, but I think this explains kind of explains the market. Okay. I had to go by high school economics. The supply and demand, right? So up here is the price, up here is the number of houses that we're selling, supply and demand. When interest rates went up, do you think demand increased or decreased? Decreased, okay. You draw a little line, that line goes over here. Okay, cool. So here's where we were at. That was kind of the equilibrium. If you just move demand down, this is our new equilibrium, which means that price would go down and volume would go down.
The supply is down too.
But supply is down too. Isn't that crazy? So let's decrease supply a little bit. Yeah, now this is where we're at. Volume is down. We're not selling near as many houses, but prices are exactly the same as they were.
Right.
The prices are pretty much the same. Now, what I'm interested to track, based on those demand numbers, if demand goes down even more, like if interest rates go to 10%, you know, then you move demand down even more, and then we sort of get out of this balance that we're getting used to, right? So we need to track. We don't know yet. That's when prices may start to fall. But what you're describing is what it would take to actually flip the market. We would need demand to go through the floor and supply to suddenly increase.
Right.
Like none of that's happening in the short term, right? I think it's entirely plausible that there's a little bit of a correction that we need to at least be educated about. But no question. Yeah. What's up?
Is there an indicator in another industry that could help forecast what is happening in housing? Because I don't know if supply and demand in all other industries, beauty for instance, is facing the same thing that the housing industry is facing.
What was the other industry that you cited this on?
Beauty.
Beauty.
Do they track that? Did that track? Yes.
But like,
All industries are.
like the stock market is usually a good indicator for the economy as a whole, I feel like, but it doesn't really factor into the housing market. Am I right? Like it
So
doesn't,
that's my question.
like I feel like the housing factor is the one that usually people look at to influence all the
First.
other ones. Yeah.
That's what I'm saying, is there, like, that's exactly my question. Are
Wait.
there other industries that we look at supply and demand and how that looks versus what the supply and demand and looks like in real estate?
Well, isn't it like, building? Is another industry that,
But that's real estate.
Well, let's invite our panelists, John and Mark, up and we can start the conversation here. I mean, how?
that question?
Yeah, exactly. So,
Okay, now.
right, yeah. Okay. What makes housing unique maybe is you can't quickly fix supply or demand, right? Like, we need to build 5 million more houses in this country. That takes a little bit of time, right? There's no overnight solution. And same thing with demand. Even if the Fed starts decreasing the interest rates a little bit, it's gonna take a second. So I think the true supply number is what's really kind of cementing the market almost where it is. Like, that's the only thing that's gonna really change things dramatically if supply goes back up.
So I have a question for you, based, I have two questions, based on what you just said.
Great.
Even if the Fed was to decrease the interest rates, the supply still would not be there. And I just have a theory of, because so many people in housing that normally would not have bought a house. So the supply of the house is just not there, because you have to build more houses and you have to sell more houses. Am I correct?
Yeah, I mean, demand's gonna, rates are gonna go down
At some point.
at some point.
Right.
Demand is going to, there's pent up demand, right? There are all these people that like, they want to move, but feel like they can't.
Right.
Let's say in 18 months, the rates are back down to 6%. There's gonna be a whole bunch more buyers, but there's not magically gonna be more inventory, right? So all that means is gonna be more pricing pressure on those same houses.
It'd be the same.
The same houses are just gonna get more expensive, and there's gonna be more bidding wars.
And then I have another question. What's your name?
John,
John. So you and the young lady, what was her name?
Kimber.
Kimber. I came up, I just happened to fall upon this classmate, I'm glad I did.
Welcome.
So what I was hearing from your presentation earlier was that we have to come from a sense of what's the word? I have my word on my tongue. A sense of the client's need, like what they need other than real estate. Like,
At some point in the future, and I don't think we're there, the industry is not there yet,
mhm,
but yes, at some point in time. Like, this has happened in other industries, so like the financial services industry actually is a
Right.
great example of how this happened. So I was a stockbroker in the late nineties.
Okay.
Throughout the nineties, I was a stockbroker, so I was one of those people that you wanna buy 100 shares, they will. And, it was a commission-based, transactional-based business. If I sold you 100 shares of AOL, I got a commission. And then in the late nineties, the industry transformed into more of a holistic, I'm gonna analyze your whole entire, our titles went from stockbrokers to financial advisors.
Okay.
And it was really fascinating, because not only was it by selling stocks and bonds, I was selling mortgages to people, I was selling life insurance policies to people, I was doing their estate planning for people. I was opening up their business checking accounts for people. It was. Instead of just managing that singular transaction, I needed to manage their whole financial picture. So we see a day where that happens in real estate. It's not gonna be about just the individual transaction, it's gonna be about the whole entire housing experience.
so I see that too.
And once again, this isn't here yet, but I could see a day Anybody in here recommended a contractor to a client?
I was gonna say
And
that, I see that.
Did you all get a check for that?
No.
So that's.
You're not allowed to, it's illegal, right? I thought it's
Why?
called a kickback.
That's what my friend said.
Are you talking about a RESPA violation?
If you recommend a contractor to someone and then they give you money feedback, I thought that was.
If it's not part of it, I think you're
So-
confused like a RESPA violation, there's nothing that says that I couldn't. Like,
Charge an extra fee.
well,
to
I
find
like, I have
themselves.
a home alarm company and every time that they install a home alarm, I get paid for
Right, so it would be.
it.
the
I think
same-
a day could come,
Right.
everybody heard of an affiliate link?
Yeah,
A day could come where every time a consumer. They go onto an app,
almost like
I need
Angie's
my
List,
grass cut,
like Angie's List,
like an Angie, imagine an Angie's List, but you're at the center of it.
yes.
It's on your platform, your app, they say, I need my grass cut, they hit a button to order grass cutting, because I think that the future of that will come. And it's like, oh, since you recommended them, maybe you get $5 every time somebody cuts grass.
So I see that in real estate, I see
It's
that.
happening in every other industry, it's
Yeah.
going to happen.
It's like, almost like property management, but you're not a property manager, you're just getting, so they're not gonna use the word referral. They will
Yeah, it wouldn't be
probably use another word, like, you're gonna get, like the ADT system, if I refer a client to him,
Bingo.
they give you $200.
Yeah.
So you're out of you're not in the center of the transaction, but once they create this industry, I see it too. That it won't be called a referral fee, you'll just be maybe I don't know what they would call it, but it wouldn't be a referral, because then that would put us in a uncompromising situation as real estate agents, because the word referral in reference to receiving monetary compensation is.
But if it's not a part of the transaction, you
It's-
can like kind of
Yeah,
do that, right? I mean,
But
unless
that's the thing, it's gonna be outside of the
Yeah,
real estate.
Unless it were like bound
Yes.
up into the transaction, where the only way this is gonna close is if you use my window company and you don't just like,
So
you can get
that's,
yourself into
but
trouble
that,
that
it
way.
would just be.
That's what we're seeing in the future, because you're seeing it in other industries, like there's this whole thing called the participation economy. Like the participation economy, and I could have a whole other class on how that, but that's not, we're not there yet, that's what we see. The day where that comes,
I see that. And
because
then-
our commissions most likely will come back.
I see
Like
that.
our average commission rate, will most likely come down.
You mean like from the 6% that given? will
Just
probably-
in other countries, it's nowhere close to what our average commission rate is. It's usually between 1% and 2%. All right, I've been in meetings with Gary Keller and he's saying, if you're gonna build your economic model going forward, base it on a 2% commission. Don't base it on 3%.
Because,
Cause then if you get 3, you'll be great, but base it on 2%.
right,
Because he believes that the overall compensation that we're gonna be receiving will come down. It's not a question of if, it's when, how.
because remember I don't know if you went to was it legislative? Yeah, legislature, when they had the class and they said that buyers agents cannot tell the buyers that they don't have to compensate them. So pay the commission, so if we as a listing agent charge 6%, we voluntarily give the buyer's agent 2.5%. The seller's agent, sorry, we give the person that's selling them, we give them 2.5%. Once if that broker says we're not compensating the buyer's agent, then the buyer has to come with their own compensation, which would decrease the amount of sales we have, because they may not be able to afford another 3.5% or 3% on top of the price of the house, which is the closing costs and down payment. So that would take us out of the game.
I tend to think though that there is a lot of talk about the disruption that will cause. That I think is a lot of smoke and mirrors. The distraction of some of the other real things that are affecting our business.
It would be a distraction, but
100% I agree.
it would be a distraction, and I agree too, but you have to think about the consumer.
It's not going to affect the consumer.
It's not gonna affect the.
No,
affect
because
the
here's
real
what they'll
estate.
Figure it out.
They'll figure it out, because
Mhm.
you look, the same way we are, buyers are able to negotiate the closing cost contributions.
They'll just negotiate.
Right.
You know, you're gonna have to put an addendum in every one of your offers that says the seller is willing to agree to
Pay a
pay
commission.
buyer's
They said
agent
that-
X amount.
So the way that the terminology has to change.
Yeah,
People
our
say-
procedure has to
Right,
change, that's it. And guess what? Like, we do that already sometimes.
Yeah.
So it's really nothing new. It's just, it isn't as widespread right now. It's not as mainstream,
Right.
and it will become mainstream. But it's gonna have very little disruption to transactions actually taking place. This is not going to take our home ownership rate and knock it down a few percentage points.
All the way we can send it to the, or the contract.
Well, and we're gonna have to,
I can see that.
and we're gonna have to,
And you know what it's gonna do is, it's gonna take the people who are skilled at having those
Yes.
conversations with
Yes.
people and elevate their business.
Correct.
And those who are unable to have those conversations, and it will be out of.
Yes. So.
and you have to demonstrate your value and articulate that value.
So there you go, like that's, I'm so glad that you said, Mark, it's a distraction. In many ways it is, like, if I'm an agent, I'm less worried about that, and I'm more worried, what I should be worried about is the disruption that's happening to get us out of the way.
Yes.
That's the bigger thing that I would be worried about.
And honestly, some of that is self-destructive, right?
It is.
You know, now, actually, I think it's really,
Because they don't.
think about what's happening right now with this lawsuit, where you have, some of these big companies who are saying, we're not gonna require you to be a member of NAR. Well, who do you think has kept the banks out of taking over real estate? You know, it's the lobbying that takes place
Yeah.
from NAR. So you can love them or not, you can disagree on whether they sold, Realtor.com. And, and what they do with your different multiple list systems around the country. But the fact of the matter is, the lobbying arm behind NAR is probably the most powerful lobbying organ, one of the most powerful lobbying.
Well, we have tax
organizations.
advisors.
Yeah. And, this lawsuit that has had Remax and a couple other big brokerages say, we're not gonna require our members to be, our realtors, our associates to be members of the NAR. That could have deep ramifications for NAR's ability to continue to lobby for our best
Could
interests.
put them out of business.
Yeah.
Because it almost says, when I look at it as like the laws, it almost says that we don't have any laws, we don't have any regulations.
So that's my concern.
Yeah,
I think it's
there's
actually
no
take
NAR.
out of it.
There's no
We have
code of ethics.
Right,
You have a listing,
yes.
nothing stops me from knocking on your client's door saying, I'm taking your listing, by the way, I know that they had you know how easy it would actually be? You know how many bad photos are on
Yes.
listings right now?
Yes.
I literally go knock on the door and I'm like, I can't believe that your agent is using their flip phone to take photos of your house, no wonder it's not being sold, look what I do. Like, if there's no code of ethics,
Right.
it is the wild, wild west.
If there's no, do you have an agent? Yes, I do. Okay, why can't?
Who cares, I'm better than that
Right,
agent.
or, what, I'll rebate you.
Right, yeah, look at it, 5% less than.
Well, I'll pay those real estate
Yeah.
fees to your to the provider's agent, so it would be just no restrictions, no.
Wild, wild west.
And
Use my contract, no, I'm gonna use your contract, no, you're gonna use my contract.
Whatever you.
Then
Let's
stop.
Done.
Contract do we have?
Yes, okay, yes, so this is really, really important, so that's an awesome conversation, and I'm really glad we have some really smart people to talk about it. So before our world totally explodes, in the meantime, how do we survive this winter? And are there any different ways we need to have conversations with our clients? So let me just start with you, Mark, as far as, let's say your listings that you're taking. Have your recommendations or guidance, whether it's about price, whether it's about repairs, has that been changing at all in the last couple of years?
The repair piece, probably not so much, if there are, so I'll just leave it there. The conversation about pricing, absolutely, I mean, that changes weekly, that conversation. I have, and maybe it's, I'm usually a pretty optimistic person. I have a little bit more of a pessimistic view of where the market is going right now and what lies ahead over the next 6 months before we hit the spring market. Because I don't think that we're done with the rate increases. I see, that demand drop. We talked about that 335 single family home, how that demand has been crushed. I mean, I was talking with a buyer recently at a $350,000 house in Parkville. with 5% down, their payment was $3,000 a month. And, yeah, right? And, you know, so something, to me, something's gotta give. And rates are likely to continue to climb a little bit before they come back down. And one thing I've definitely learned not to do over the 20 years is to not do too much forecasting of where rates will be. I'll tell you, this time last year, the Mortgage Bankers Association was projecting that rates by the end of this year, by Q4, which is where we are right now, would be in the high fives. They thought they would come down to about the high fives. And now we are inching around 8. We will be, before we are all done with this, we will be solidly. Again, I just said I don't want to forecast. But look, the fact is, there's gonna be more rate hikes. Yesterday's news just came out, the economy grew, the GDP grew by 4.9%. I think it was GDP numbers, right? I mean, and it far surpassed economists' expectations. Consumer spending is still high. And it just, the feds have not accomplished their goal yet. Inflation is still high. Housing prices haven't really come down in most of the country. And I do think that they are looking to have some of that. I think they are looking to see pricing actually come down before they ease the pain there. And we see it. Baltimore City is actually one of the early indicators, always. Actually, it's not actually, so they're the first to go down, they're the last to go up. And Baltimore City, in one of your slides, it actually does show that pricing is down by 5%. The average, I think the median is down 5%, the average is down 4% from a year ago. I think it was a year ago, right? You know, and you know, if we remember before COVID happened in 2019, Baltimore City was experiencing price depreciation. All of those surrounding counties were not. They were seeing continued appreciation occur, but Baltimore City was seeing price depreciation.
What happened? Still is, I think.
Yeah, I mean, I don't know if there's, there's so many factors that go into it, and this kind of goes to the question you were asking before we jumped up here. You know, trying to compare it with one other industry or one other, you know, graph. I mean, there isn't. You know, there's such a makeup of what makes the housing market chug along. And it's not any one thing. There's certainly, I don't think, any other industry that mirrors ours or that, you know, gives us a kind of a tracking of like, all right, well, this one moved up, so we're gonna move up. Or like, there's no parallels. Even with, I mean, certainly not with the stock market. I mean, so
Maybe like in lumber, it's like very
Lumber.
specific things, it's so much not that helpful.
you know, so, but I am expecting to see more depreciation, more, and that's, you think about it. When we think about a $350,000 house in Parkville costing someone $3,000 a month. First of all, that's a 50% increase in their mortgage payment from 2 years ago. At the same price. And now what we know is that the price grew over those 2 years. So that house in Parkville might have been $300,000 2 years ago, maybe $315,000. But that payment was less than $2,000. That payment might have been closer to $1,800.
Not an affordability issue.
And it's real, you know, and I think you see it much more so at that first time home buyer level than anywhere else.
Yeah.
And so I'm not surprised to see this, the lower the price point, the more demand is getting hit. A $335,000 house today costs a heck of a lot more than a $335,000 house a year ago, or even 2 months ago.
Right, and that population has less wiggle room to sort of absorb that big difference.
It's pricing enough.
Right.
I mean.
And they're not building benefit house.
Or any
Small,
houses.
big,
No.
houses anymore.
No,
So, John, I know you have
But
to
you-
leave in about 4
you-
minutes.
Well, you can study history then, so like like 78 to 80, 1978 to 81, somewhat similar, like rates from 78 to 81, went from about 8% to 17%.
Yes.
And then for about 6 years after that, we saw flat, like houses didn't really appreciate. It was like, there's a lot of similarities, like the number of units sold, when rates went from 9% to 16%, the number of transactions available dropped almost by 50%. Which means that there's less available transactions for agents, so
Right.
you can see the trend, you can see trends in history, and then you can try and use historical trends, try your best to predict the future, but then who the heck knows that. What I would say is that as far as pricing, I've always done this. I want to be the best product if I'm listing. I want to be the best product at the cheapest price. Period, end of story. I don't care what market I'm in. I want to be the best product at the cheapest price. And it's always served me well, like
but what does that mean?
Being the best, right. I was
So
gonna say
if the last house, if the comparable houses that are in similar condition, not grandma's house compared to a completely rehabbed house, but similar condition. If the other houses are 350, I want to price it at 345.
Okay.
And what do you say to a seller who says, I wanna be at
I want
355?
this.
Do you wanna sell the house?
Great
You
question.
just wanna sell the house quick.
Great, no, it's a great question.
That's-
I feel like I'm real good, it's great, yeah.
Usually I pull out a notepad
Okay.
and I do this.
Pull out your picture page.
I'll hit on my notepad and I'll this is the housing market, let's just say.
Okay.
Would you agree that we're in an upward trend for economic, the economy? What are you hearing on the news? You're probably hearing more negativity.
Right, yes. They basically say,
So
wow.
I always want to price ahead of the curve. So if the market is trending up and the last house is on the market here, I'm pricing it actually probably right here. If the market is going this direction and the last house is here, I'm pricing it here because I want to be ahead of the curve.
Ahead of the curve. So things do.
And then, and if they say, well, but my house sold, my neighbor's house 6 months ago sold for this, I'm like, yeah, because that's the curve that we're in. And maybe right now we're somewhere right around in here, but I agree with Mark. I would then pull out my stats
Okay.
and show stats showing that things are slowing down. I pull out the slide that Doug showed. Activity is going down. What does that mean for you? There's supply and demand, and I'm gonna have an economic conversation with them. Most agents will not have that conversation with them because they don't understand how to have the conversation. That's where the skill base comes in. Versus let's just throw it on the market and counter offers on Monday.
So that's what I did on my listing that I had, and I even did that on my rental property myself. But on my listing, I said the houses 6 months ago, it's a small listing. The houses 6 months ago, they did sell for 125, 130. But because of the market we're in, I didn't know the market that we're in, we're gonna list yours at 120 and be prepared for us to drop the price in the next 3 weeks or so, because we need to stay ahead of the curve, because there's still houses on the market for 125 and 135. So that's what we did, and it worked out the conversation.
I'm out for a buyer, I'm not having that.
Yeah.
This is-
For a buyer,
Right.
I'm having a conversation about why are you thinking about buying a house? I'm going to the emotions of
Mhm.
why
Well,
you're
that was
thinking
that's
about
exactly
buying.
what I wanted
Okay.
to say before, I had to cut out here about your part stop, but. I think that one of the most important things that as realtors we can focus on right now. Is understanding who's got those life events.
Yes.
Because in this kind of a housing market, people aren't gonna be moving just because they wanna change the scenery.
Right.
This
They have to.
is because people have to move,
Mhm.
and there's always people that have to move.
Right.
And there's always a lot of people that, you know, even when the market was at its lowest point. There were still, the market, the number of transactions that were occurring back in 2009, 2010. Was about, I think it represented about a 40% reduction,
Mhm.
which is very much like where we are right now. But it also means that there's still a lot of people out there transacting.
If people get divorced.
If you get distracted by the woe is me, the market is down, then you will be out.
There's always business.
There is
But
always.
somebody is
You don't
walking
have to
home
worry.
today.
Luckily, not one of us individually owns every home out there. Luckily, right? But there's, in that, I mean, when we talk about some of these big numbers, these are very macro scale numbers. Even when you start dialing it down into the zip code, they're macro when you're talking with a homeowner. When I sit down at a table with a client, buyer or seller, and we're going through these numbers, I usually, the way I tie it all in is to say, look, this is all big picture stuff. But we have one job here, we have one house to sell, we have one home to buy. It doesn't get any more micro than that at all.
Right.
Let's focus on it. I'll leave it with that.
Yes. Thank you. Somebody is going home today, hopefully it's none of us. And somebody got access to somebody's phone and they saw some text message or something that they didn't want to see, and they're getting divorced. I don't think they're questioning whether or not now's a good time to buy, now's a good time
They
to sell.
just went out, yes. And so
Yeah.
this leads to,
So that's where we
Right.
have to be much more focused.
which real estate service, which I have.
Well, we gotta have,
Yes,
you gotta find, so I was at a coaching event last week, and now I think more than ever. We've always said, okay, listers last, go after listings lead leverage. Now more than ever, that's the case. Like, you need to become masterful at attracting listings. Because if you have the listings, it doesn't make a difference what happens with buyer agent compensation and blah, 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 it doesn't matter.
because it won't, you'll be compensated because you have.
I have the inventory that everybody else needs.
You hold the stick.
Right.
And as long as I control the inventory, you need to buy a shoe and I have the shoes. You either got two choices, you're either barefoot or you're buying my shoes. Cause I have the shoes. So we've got to become masterful at attracting listings, and that's where death, divorce, disability, like those 5 Ds become very, very important. Now, what does that mean for us? Like, obviously, you're not gonna put a sign out and say, hey, anybody getting divorced, call me, but nevertheless, your database, you have to have a bigger database now. And Mark said something earlier, it's like, this is all noise, and I love it, and I watched a video last night, and this is our business, so like, just listen to this. If you are sitting here today and you do not have a relationship with your audience, if you are not the person that they're interested in, then you're vulnerable. Because somebody else will get in between that relationship and then charge you. That's Zillow. Now more than ever, if you think about the demand, it's funny, I was in the back of the room just watching, and not that there's anything wrong with it, but the number of you all that were on a phone at some point in time and that's normal now. Your clients and consumers in general are being hit between 4,000 and 6,000 times a day with ads. Some sort of ad. How many of you have been on TikTok in the last 24 hours?
I have.
How many have been on Instagram in the last 24 hours? Facebook, Twitter, I mean, you could go, I don't know what else. Which one did I miss? The news station, the radio. We're being bombarded. There is a fight for the attention of us. There's also a fight for the attention of your clients. And it's not a question of if, it's a question of when your consumers, your clients, see somebody else's TikTok channel. You think you have a great relationship with them. I helped them buy a house. I helped them sell a house. And then they see somebody on TikTok that looks appealing for one reason or another. Oh, let me click on that link. And the next thing you know, that client that you thought was your best friend is now using somebody else. So we have become much more intentional, much more intentional about nurturing the relationships with people and providing value to them inside of our database in the way that they receive information. So like all those slides that Doug did, and trust me, I literally just put out my first TikTok post 2 days ago. So I'm no expert in this. However, the reason I did it is because it's not enough anymore to take a snapshot of that slide and email it to your clients. Because even us, do we read all the email? I can't tell you the number of agents. I have a happy hour this evening, a loan officer in another market center, and I called 2 agents. I'm like, hey, are you gonna be at the happy? I didn't even know about it. You didn't see the email, you didn't see the Facebook post, you didn't see. No, because our attention is in someplace else. So instead of, my recommendation would be, I don't want to see your monthly market snapshots. Well, A, it's better than not doing anything. It's better than not doing anything. But what I would rather see, and trust me, it's uncomfortable. It's uncomfortable for me too. I'm 51 years old. You think I want to be on TikTok? Right. However, what I understand though is that's where eyeballs are.
It's essential that we be in.
I believe that in the future, it will be, how do we provide value? How do I know, I've been married for 24 years, so I've never done online dating. But I imagine that the way it works, I could never imagine going on a quote unquote blind date. I don't know, does that even happen? I don't know.
Yeah.
Does it happen? Like, there's no way in the world I'm gonna go on like,
First sight.
there's no way in the world I'm gonna go sit at dinner with somebody that I have no idea who they are.
Yeah.
Because if I don't like you, I need to have the ability to educate, right?
Right.
So if, this is just me thinking as a consumer, I would rather at least have a conversation with you through this or through that, or I'm gonna stalk you on Facebook or Instagram. And even then, I'm gonna be a little worried because that may not be the real person. That's how consumers are thinking of us.
So,
How do we convey that we're knowledgeable?
right.
I can convey that I'm knowledgeable by taking one of those screenshots and saying, here's my interpretation.
But you green screen it, but you green screen that infographic behind you and then you talk to your clients and tell them what they
Yes.
want to hear.
Social media does not work for me.
No,
Yes,
no,
we did. We had a CEO on social media a couple months ago. We'll do it
you
again.
haven't mastered the art of social media.
I
It's
really
not that it
don't want to.
doesn't work for
Right.
you.
I really don't want to.
Well, that's fair too.
I'm not,
It's okay,
yeah.
just
We
Just
cut ourselves
be
out.
aware that
Because that's the new
your database
generation.
They're on social media.
is on social media, and they might be talking to me.
Unless you're.
Because you're not, so it's okay, but then you better have some sort of way to stay high touch with them.
I do, that's what I was gonna say, I do, so my personableness that I have with my clients, that keeps them, I fall in love with them, they fall in love with me, and they send me referrals. I walk in the room, they're like, this is the best agent, I'm like, I humble myself, and I'm like, oh my God. But social media, and I guess I'm maybe mentally, social media does not gravitate to me, because mentally I don't like it, I think it's the death of the world.
Oh my God.
So I don't use it, I mean, I go.
Trust
in,
me,
might
I
do
get it.
something, and I get no hits, but if I put a picture of myself, I get how many friends I have, everybody hits comments,
I
they
get it.
say nothing about my real estate, so I just don't.
You don't have to be an expert in social media, like, trust me, you don't have to be an expert. But you need to stay top of mind some way.
Yeah.
And it starts by having a database, because remember,
Yeah, I do have.
I get that your database is being bombarded by everybody else that is on social media, so you need to be making sure that you are high touch,
Yeah,
high
I
touch,
with that.
high touch.
That's what- yeah.
And
Is 30 years the max number of years that people have financed homes? Have you ever seen it with a way?
I haven't seen it in the US, but in other countries, they have 100-year
Over
mortgages.
the payment with the rates, like, is there any?
In other countries, that they do have 40, 50, 100-year mortgages. I'm not that smart. But I could see if we have the supply demand imbalance, I don't see any way that we get out of that unless they can create more land and build cheap houses, and I don't see a solution for that.
But could there be more?
But I could
It's
see,
more affordable because the payments are stretched out over a longer time.
I could see that.
But that's a riskier product for the lender too, the same way that a 15-year loan gives you a 5% rate and a 30-year loan.
If you told me I could get a 100-year mortgage and still get the tax deductions along the way, oh yeah, I get a 100-year
Just think
mortgage.
about how many.
I ain't gonna live to pay it off, but I'll get one.
20% rate.
People refinance.
John, I know you got it.
30 years,
Yeah.
40 years, you finance
So-
another 20, that's 40 years right there.
So let me just mention something. So next week, I'm doing a class on probate, which is really all about how to find listings.
Okay.
I think it's
That's
Thursday.
All right.
Yeah.
Okay, that's Thursday. It's all about how to find
What
listings.
time?
Right.
It's a lot of fun.
Probate court.
Yes, and I'll share it
Yes.
easier way.
Okay.
Yes, much easier.
Okay.
Can I just tell you, I'm doing a reverse mortgage deal now, that's like my focus, because I did one, this is my first week, and I understand the whole concept of it. And so I have one now, that's my first one, that's one I did.
But so here's the two walkways I'll be doing.
I'll be here.
Like, and you'll see me here often. I love the game of real estate, and I know enough to be dangerous. I've sold quite a few houses. And I'm here to help you, every single one of you all. I want every single one of you all to reach your wildest dreams of real estate. With the caveat that if you ever ask me for help, I'm gonna say, yes, by all means, I'm willing to help you. I'm gonna ask you for two things. Let me see your database and let me see your calendar. Because if you don't have your database in order, no matter what I tell you, it is not gonna make a difference.
In order meaning all of the.
Like, so here's how your database should, starting thing, like, this is. You have people in there and you have to have. You don't have to do anything, you should have at least 4 pieces of information.
Okay.
Name, email address, cell phone number, and a home address.
Okay.
And then you need to know whether they rent or they own that house. Like, those are the 4 pieces of information that are critical and vital. Because now if I have all of the information, I can actually create customized, value-added marketing to you. Because if you own a house, what's gonna happen to that house at some point in time?
You're gonna sell it.
At some point in time, that house is gonna be sold.
Or rent it.
It, or rented, yep, it's going to transfer, there's going to be some sort of transfer. So every single person's in my database, if they own a house, I'm tagging them as a seller. 'Cause one point in time, they will be a seller. And what does every seller wanna know about their house?
How much can I get for it?
How much is it worth?
Yeah.
So now I know what marketing and what value I need to provide to them. If they don't own a house and they're a renter, what do most people want to do at some point in time?
Wow.
So I know that they're a future buyer, so if they're a renter or they don't own a house, I'm tagging them as a future buyer. And my conversations and my marketing to them is gonna be about how do you buy a house?
And
It
then
gives me a
they'll
reason
sell
to
it.
stay in relationship
Yeah.
with them, but it's much
Okay.
more strategic.
Yeah.
But so you have to have those 4 pieces of information.
All right, what about our calendar? Tell me about my calendar. Everything on your calendar should be.
Well, your calendar should reflect your goals.
Okay.
So your calendar should reflect your actual goals. We can do a whole other class on 401s, what that should look like. But
Lead gen should probably.
if I see someone's calendar, saying my business, I'm struggling in my business, and I look at your calendar and your calendar is white. Well, no wonder you're struggling in your business, because you ain't doing anything.
Okay.
Not that you're not doing anything, but you're not prioritizing the things that need to be done, that are critical and vital to your business.
Gotcha. Makes sense.
So at a minimum, your calendar should reflect the things that are critical and vital to your business. And if you're in real estate, we only really have 5 jobs. Lead generate, and let's just call that talking to people.
Follow up,
Lead follow up
script practice.
and role play. So let's just call that conversation dialogue. So when someone says, hey, I'm thinking about buying a house, but interest rates are 8%. I think I should wait until they come back down to 6%. That's what a script or a conversation framework would look like. How do I overcome that objection? You're going on a listing appointment. They say, listen, my neighbor's house sold for 370. You're telling me it should be 350. How do you overcome that? You should be practicing those conversations. What are the next two?
Negotiation,
Negotiations?
one more.
Appointments.
Appointments, yeah.
So if you haven't, if you're not, your calendar should show that you're doing some of those things, because if you're not doing those things, what are you doing? And if you don't have contracts to negotiate or appointments to go on, now what should your calendar show?
But you've been lead generating.
You
Call
don't
them.
like people.
Talking to people, script practice and role play. So I'd like to keep things very, very simple, and that's what your calendar should look like. And then,
To accelerate a new career less than 5 months old. Because that's the situation I'm in. 5 months. Well, started in August. Lead generation. I'm doing. What else?
Add your
Everything
database.
else-
work that.
Read 10, how do you do
And
it?
then training and education, which you're doing right now. Role playing, conversation frameworks, and then the rest of my day is nothing but lead generation. Nothing but lead generation, because if we don't have clients, we don't. And nothing. I see a lot of people that I'll see over and over and over and over again in training. I'm like, "Man, you're training yourself to death,
They don't do
but you're gonna be a broke, you be a well-educated broke person."
Yeah, I think the, you know, you do those 5 things, but I think you have to be really good at, you know, set appointments, but when you get on those appointments, you need to be able to show up in a way that makes them want to choose you.
And that's where script practice, role playing, things like that come in. So if I don't have any clients, like, you don't wanna be put in the basketball game, and that's the time to practice.
Yeah.
Right.
You practice on your client.
Before you get in the game, so if I don't have clients, part of my day is the lead generation. And then I'm gonna be role playing with other agents saying, okay, listen, I'm gonna pretend that I have a buyer presentation or I have a listing presentation. Can you critique me? Can you do? That way, when I get the opportunity, I can make the shot. Is that helpful?
Thank you.
Thank
I'll see you all next Thursday.
Thank you, thank everybody in Zoom land. This is great.
Bye, guys.
that.
Happy Thursday.